number one. Number two, I find the use case for payment systems like a USDC very, very compelling, very, very interesting. And I certainly want, and I do use it. I've been talking with our different to the price of Bitcoin or any other token or coin, because we're the exchange, we're the compliant exchange. And so volatility is what we thrive on, and we provide a spot price. That's the whole idea. And the value of saying before I cut out for a few minutes was that my thesis is, I don't care what geography you're in the end, the relationships with the banks will be, and their clients will be with compliant exchanges, not rogue exchanges. And so there's much more value in that, because right now, if you're talking to a Canadian bank or a bank in the United Arab Emirates or in England or in Switzerland, they want to work under 100% compliant order, because they're already working under compliance orders. And so they're not interested in getting involved in anything that's rogue. And so we're limited in terms of the services we can provide, except we're actually the only one pan-Canada. You can find other exchanges operating out of Alberta, but you can't find them in Ontario. And that's because they're not compliant. And so they're going to have to be regulated as we are. And what will happen over the next 36 months is the regulators are going to start regulating, and they're going to start forcing, people that are trading in these, let's call them gray markets, they're going to force them to register. And we think that's an important thing, and we're going to be agitating for that, because we believe in compliance and we have to invest in it. We want everybody to be compliant. We think they should join us. And we think by providing this platform and being compliant and showing that it operates successfully, gets the banks more and more comfortable. So we think we're in the first inning. But it's not just Canada. I mean, the same debates going on in the United Arab Emirates with some of the largest banks in the Middle East, and England and Switzerland and Brazil. So, we're able to go to these countries and say, look, we're operating under this order, the OSC issue, the very first of its kind. Your rules are very similar. Why don't we take advantage of the fact that we've invested in all this compliant infrastructure, link to your bank, and provide you with spot pricing on whichever cryptos you elect to offer to your clients. That's sort of what my investment thesis is about this company. Not just an analogy. You'd rather own the jeans, the picks, the shovels than trying to poke a hole in the ground for gold. Get everybody to buy the infrastructure from you. That the reason you would want to consider owning, let's say Bitcoin, sort of in a diversified portfolio of assets, stocks, bonds, cash, Bitcoin, real estate, etc. Diversified portolios. Let's go to the sovereign wealth and pension level, where I work as an indexer for those guys, and that's 90% of the world's wealth is tied up in sovereign funds and pension plans. And so they have a mandate of diversification. The typical mandate would be no more than 20% in any one sector, and there's 11 sectors in the S&P, and no more than 5% in any one stock or bond. And so that's basically how you build these long-only, multi-year, massive pension plans. The typical fund size for sovereign wealth, a small fund would be 100 billion, a large one would be $1 trillion. And so if you're an oil-rich country, you would go to an indexer like me, or many indexers, I'm one of them, or at least one of my companies is, and say, look, I want to develop the S&P portfolio X oil, X airlines, because they already have oil. They already have their own airlines, so they don't need exposure to that. And so that's what we do, and we get paid for that. We get 2 basis points to 10 basis points. That's a lot on $100 billion. So what happens is we're constantly being queried in terms of what their assets are, what they want. And so they want that. If you ask them, hey, listen, do you want any crypto in an index? And they say, well, we can't own crypto right now because it's not regulated yet. And they work in a regulated environment. And they have regulation infrastructure. So they report, the market closes, they mark to market their positions, and it goes up to the compliance officer and all that stuff. So everybody's been talking to them. They'd start with 50 basis points in Bitcoin if they could. Some of them 75 basis points, some of them 1% in the portfolio. 1% of $1 trillion is a lot of money. And so you have to start thinking about, do I want to take my position before the regulator regulates, and all of a sudden, the pension plans, the sovereign plans decide to allocate and index crypto. They may do more than just Bitcoin. They may do some Ethereum. They may do Solana. You don't know. It's whatever they're going to do, and that's the investment thesis. Is why wouldn't you? The reason that Bitcoin is so volatile is there for all of the excitement about people own Bitcoin. Nobody owns Bitcoin. It's only 800 billion, and that's a rounding error. It's a nothing burger. It's absolutely nothing in the context of financial services globally. So the whole idea is, why don't you own this before it gets indexed? That's number one. Number two, I find the use case for payment systems like a USDC very, very compelling, very, very interesting. And I certainly want, and I do use it. I've been talking with our employees in our operating company. Next year, would they be interested in taking USDC in salary? And they are. And we just have to get it's much easier. I mean, it doesn't matter which country they're in. They're happy to hold the US-backed dollar. And it's much easier for us on payroll. We just need to get our compliance officer on board and our auditor. And they're saying we won't do that till we get some policy on stablecoins. So it's all pent up demand underneath policy when it comes. And Loomis, she's got a bill. Toomey's got a bill. Haggerty's got a bill. Senator Daines, Montana's got a bill. They all have bills coming. So we're right at the first inning here, and it's very exciting for me. I think you got to take a position now, not after the institutions have started buying. Let's say I want to, this is a real use case that happened a couple weeks ago. In our operating company, we're about 30% in real estate. It's one of our asset classes. So we buy and sell real estate. And in different geographies. So if you want to buy something in Switzerland, you got to do Swiss francs. So you have to take your US dollars, you have to ACH it to a Swiss bank. It takes 3 days. You have to go through a very long protocol because we're talking about millions of dollars. And your client, you have to get approval institutionally to move it. Very expensive, very slow. But in this particular case, they lost it. They lost millions of dollars for 48 hours. Couldn't find it. They had a Fed transfer number. Couldn't find millions and millions of dollars. 48 hours later, they found it. Who gets the interest? Who pays for the fees? What about the fact that if I hadn't been able to close, I would have lost the option on that building? So all of that was being played out, 36 hours of staff time, tremendous amount of stress, trying to tell people that the bank lost the money. And I thought to myself, this is really crappy. This is a really bad system. Now, if I could have just simply said to the vendor, will you accept USDC or any stablecoin? I could have sent it to them in 2 seconds with full transparency, full accountability, full audit trail in perpetuity. I mean, that's so compelling that I know with certainty it's going to happen, which is why there's, $54 billion in USDC right now. And and I think the largest account size is only 60 million. So that's nothing in terms of what it could be. And so these use cases for making financial transactions more compelling are very powerful. They're faster, they're cheaper. they're transparent and they're 100% compliant, because my audit department could go look at it, and the auditor could look at it, and the vendor that's selling can see it, and it's essentially a smart contract. So for me, there's no question that it's coming. So I might as well own a piece of Circle, and I do. I mean, I don't know why I wouldn't want to own that. I don't know why I would want to own FTX. All of these big infrastructure plays, and it's the same investment thesis for WonderFi. WonderFi is just infrastructure, and it's compliant infrastructure. And I think it's going to be very compelling for Canadian banks one day that want to do spot pricing on whatever they decide to allow their clients to buy. Because I think it'll be a limited, maybe 3 or 4 tokens in the beginning. But I think it's going to be very interesting. Well, everybody knows that. But the real potential is not that. The real potential is making it an asset that sovereign wealth can buy and pensions can buy. That's the opportunity. That's so huge. And it's I don't know when it's going to happen, but it may not be too far off, particularly for some basic, large, liquid coins like Bitcoin and Ethereum, maybe, USDC, Solana, Polygon. Those are all of interest to large institutional accounts. The infrastructure, it's so you can buy individual tokens, but you want to have some exposure to where you're agnostic to the price of cryptocurrencies, and that's an exchange. And so if you want a compliant exchange, that's obviously WonderFi. It's the largest in Canada, which is where the regulator in all of the geographies around the world is the most advanced. It's the only country that started with Bitcoin spot pricing ETFs. Same with Ethereum, first order for dealer brokers. So, WonderFi, that's my investment thesis, that it's 2 years ahead of everybody else, maybe 3. We'll have to wait and see. It's a great place to get infrastructure exposure, and on a compliant basis, so you're not offside with regulators. The scale is 18 different sovereign funds just in the UAE. The largest is 900 billion, the smallest is 100 billion. That's well over $1 trillion. And just, they might allocate 50 basis points, they may allocate 1%. You're talking about billions of dollars of demand. And when they index, they don't necessarily care about price. What they care about is liquidity. So if they're able to go in and out, so if they buy at 1% weighting and it goes to 2%, they have to be able to sell it down to 1%. But if it drops to 0.5%, they'll buy it back up to 1%, which just means it's a perpetual bid in perpetuity. That's why there's so much volatility in Bitcoin, because nobody owns it. I mean, relatively speaking, it's irrelevant. 800 billion is nothing in the context of sovereign wealth. So I'm very optimistic that when this comes, there'll be a lot of demand, and that's when you'll start to talk about Bitcoin at much higher prices. I think what they should know is that we are trying to become the largest compliant operator of crypto exchanges tied to dealer brokers, and that we provide services in every geography we can. We're obviously biggest in Canada now with over 700,000 accounts, but we're doing the same, exploring many other different geographies with the same idea. And the concept is, look, provide centralized wallets on a compliant basis, provide decentralized wallets on a compliant basis, but do it on a compliant basis, so that we think long-term value is on the compliance side, because it gives you access to hundreds of thousands of customers in the banking system. We're not crypto cowboys here. We're basically trying to add a new service on a compliant basis to all kinds of different. I think what I've learned is what matters the most is diversification of assets. I mean, I've been taught that lesson multiple times the hard way, and it applies to crypto as well. You don't want to bet the farm on any one thing. You want a broad diversity of projects, because again, Bitcoin is not a coin, it's software, Ethereum software. All of these projects have different productivity opportunities to them, and you just don't know with certainty which one's going to win out in the next 5 years. And in addition, I like the infrastructure plays. I like owning a piece of FTX. I like owning a piece of Circle. I like owning a piece of WonderFi, because they're big infrastructure plays and they're compliant. And so, you're getting a chance to get in on the ground floor of a brand new industry, and that matters. It really matters.